So whenever you do research on a company you want to invest in that's about to go public, I want you to read the S1 filing. Okay, don't ever invest in any IPO unless you get an investment offering memorandum. And the same thing goes for any investment in general. If a friend comes up to you and says, hey, can you invest in my startup? Ask for an investment offering memorandum, because by law in many countries, all the major risks have to be disclosed by lawyers and investment bankers. I'm so sorry. God, it's early. By lawyers and investment bankers. Okay, so make sure you read these things. Now, the place to get these is you can always go to sec.gov. Okay, so by law, if you want to list on major markets, you have to actually file an S1 filing, what I just showed you. And the example I just showed you was for the Facebook IPO that occurred during the summer of 2012. Okay, which was a terrible IPO, actually. Morgan Stanley really messed it up. So what you do here is you enter in FB for Facebook. The new name of the company is Meta. Still not the nicest company. And then what you can do is you can do a search on the S1, okay? And you'll find that you'll see a number of S1s here from May of 2016. And this is the final S1 here. That's why it says A for amended. Okay, you have the right to look at this. Anybody can. So this is the entire document I just showed you in my hand. Okay, so this is the entire prospectus, the IPO prospectus written by Morgan Stanley, who led the deal. Again, it was a botched deal, but the stock has done much better now since, of course. Last thing I want to say in that is this. It's hard for me to say this, and I say it with love in my heart. If a friend comes up to you and says, can you invest in my company? Not only do I want you to ask for an investment offering memorandum, which is usually smaller than this, but it should exist, but I want you to ask yourself this question. Don't say it out loud. Ask yourself this. Why am I so lucky to be given the opportunity to invest in this company? And one of the reasons might be because nobody else does. So be careful. And I don't want people to invest much in pre-IPO companies because they're very illiquid. Okay, for every Facebook IPO, there's gazillion social media companies that are private that go to zero. Yeah, and you become a stockholder too. You might be stuck in it for years, and you might buy what are called common shares instead of preferred shares. And the difference is this: if you invest in private companies and you invest in what are called common shares, which are the shares when you buy an IPO or you buy stocks in the market. If you buy common shares in a private company, you can get diluted big time, meaning the value of your stock might go down a lot because they create new shares. So what you want to do, if you have that luxury, is ask for what are called preferred shares. And as the name suggests, you get preferential treatment. Common shares are the lowest of the low. In fact, if a company goes bankrupt, here's who gets their money back first. It's always the debt holders, the bond holders. They have a senior claim on assets. Then the preferred shareholders. And then the lowest of the low in there are the common shareholders, hence the name common shares.